Gold is pumping again towards over $5,000. Silver is pumping. Bitcoin has fallen to its lowest level since April 2025, recovering somewhat, but possibly only in the short term. Right now, we simply have the risk of another AI bubble. AMD's numbers have come out, and we'll take a closer look at them in just a moment. Of course, the entire market in general is also, it's slowly but surely starting to wobble a bit. We simply have too much news and too much uncertainty. We'll definitely take a look at all of this in today's update video. So first of all, good morning. Bitcoin is at 76,300 US dollars. And before we get started, as always, feel free to give the video a like, subscribe to the channel if you haven't already, and of course, feel free to join the free Telegram talk and signal group. If you're interested in updates, news, and signals, feel free to join. You'll find the link for it for free down in the video description. If you need an exchange to trade crypto, stocks, or Forex, use my partner BingX. They offer up to 11,500 USDT in bonuses. Sign up via the link in the description to support me and the channel. All right, let's get into it. So, what happened? What was going on yesterday? Somehow things went wild. We're at $76,300. Yesterday, we briefly dropped to $72,800. The next position was also filled here by me, down here at $73,400 or $73,500. Don't be alarmed. Yesterday, I moved the buy zone over a bit here. That was simply because I wanted to go a bit deeper into it. Also, yesterday during the live stream, for me, this area around 71,000 is still kind of important. 69,300 US dollars. So that's the anchor point I would like to see. Why? Because in the heat map, which I should probably quickly refresh here since it hasn't updated yet, if we take a look at the heat map here on the monthly time frame, yesterday we still had an extremely large cluster down there, which has actually been there at the bottom the whole time. And that went down to about 69,000 US dollars. If we filter out the small orders and the orders that are way too large and zoom in here, we can see that down here at 72,000, or rather still around 71,000 US dollars. That's where most of the liquidity is currently located. So it would make sense for us to see another lower low. Yesterday, a huge number of new longs were added again, which is making me a bit suspicious. Second alarming point, something I haven't seen before. The probability of a rate cut in June is now only even odds. So it's 50-50 that we might not get a rate cut at all. And the first one would be at the earliest, probably not until July. Point number 3, to briefly summarize everything again, where is my Twitter account? Here. Let's briefly go to Twitter. Let's go to my channel and take a look at everything. Yesterday, I posted a little summary on Twitter of everything that's still relevant. USA, Iran, escalation. Yesterday, a drone was shot down by Iran. That means there's still the issue of uncertainty. Also, of course, for the oil price, which in turn drives inflation up, that's back on the table. Carry trade. What's happening with the carry trade? At the moment, we'll take a closer look at everything in the Forex update. In a moment, the US dollar is at 97. It's already rising again towards 100. 100 is kind of the level I'm keeping an eye on for the carry trade at the moment. Then the AI bubble. This is now the important point, because a few days ago we talked about why do I have to, Oracle, borrow $50 billion, 20 billion of which are supposed to come from stock sales in order to get a bit of new money in. If AI is doing so great, then why do I, as Oracle, need $50 billion and 20 billion through stock sales? Can someone explain that to me? It actually doesn't make much sense, because this cycle, or rather the pyramid scheme in this AI bubble, it seems to be working, or is it actually not? Stock market drop in Asia after US tech sell-off. Yesterday we had a very strong sell-off in the tech sector, EU, USA, India. And now, apparently, the Asia session is also following suit, struggling a bit as well, because the outlook is no longer as good. AMD slides after AI-fueled forecast fails to satisfy investors. AMD shares fell after the company's sales forecast underwhelmed investors, a sign that it's not making the AI inroads that were anticipated. It doesn't seem to be going all that well. Then we also have the fluctuations between NVIDIA and OpenAI. They aren't really coming together properly. Yesterday morning, Sam Altman said they're looking for alternatives. In the afternoon, the NVIDIA CEO said, no, everything's running smoothly with OpenAI. At the moment, and I have to be honest about this, it gives me the impression that The markets, especially in the AI sector, are being artificially propped up. And I'm mainly talking about NVIDIA now, because NVIDIA is holding up the entire tech sector. We keep talking about NVIDIA, about how the stock is just moving sideways, no new all-time highs, even though, yes, that's how it is. Everything looks great with the tech sector and the AI bubble and all that. And nothing is happening there. If NVIDIA drops, and we also have data from Alphabet coming this week, so of course that's something to mention as well. Those are coming out today. If Alphabet also fails, especially with its cloud business and so on, then things are really going to hit the fan. And then what we saw yesterday in crypto is just the beginning of what's still to come. Because the US stock markets are still looking very, very solid. That means if some kind of sell-off should happen, are we going to have some serious problems? Let's take a quick look at the spot order book. Spot order book, yeah, it's not really convincing. Sure, we always have like 10 million in buy the dip orders. Take a look at this. Early this morning, the first sale, the first bigger one towards 30 million, already wiped out these candles here again. In the last few hours, selling has started again. US futures are in the red. The AI bubble is starting to wobble a bit, so you see the problems aren't over yet. Then there's the new Fed chair. He's more in favor of a strong US dollar and less for pumping unlimited money into the market. Rising inflation, BlackRock is warning. What do you mean BlackRock is warning? Here you can see the article, BlackRock, PIMCO see inflation risks while the broader market has doubts. The bond markets are the next topic, which BlackRock is also referring to. And that's something we've been talking about this whole time as well. Take a look at the bond markets. The bond markets keep rising and rising and rising, and they're not dropping. The only one that has seen a slight pullback is Japan, but even Japan is still at a level where I can say that nothing has happened yet with the carry trade. That means the uncertainties that we still have in the market right now, or rather that haven't even really been triggered yet, if they do get triggered, then things are really going to hit the fan. Yesterday, Bitcoin gave us a little taste of that in the first smaller AI sell-off. NVIDIA dropped 3%, Bitcoin dropped. Do I like this bottom formation much better than the previous one? Yes, why? Remember what I've always said the last few times. Up here, we always pulled the liquidity upwards. Again, here, everyone was bullish towards $91,000. Hey, cool, we're going up and up. Again, it was just liquidity being taken. And for the first time in a long while, we have a nice bullish divergence here again. Always with wicks. The wicks bother me, that's not an issue. We have to fill those anyway. But here we could or really do have a chance for once. For the first time in a long while, to look for a meaningful bottom formation here again, but not at a fast pace, because if we rise quickly, everyone goes long again, then we have the same problem as before and fall back down. That means for me, everything between 68 and 71, 72,000 would now be another bottom formation, consolidating a bit there, then also testing the old all-time high here a little in order to possibly complete this entire move for now. What does all of this depend on now? It mainly depends on whether the stock markets survive all this shit. Are we going to get through this reasonably well? If we get through it now, then hey, okay, an all-time high is incoming. If not, then Bitcoin will also fall significantly lower. According to the heat map, that's it for now, at least on the 1-year heat map, or rather on the monthly heat map. The higher we go, of course, that is if we step up to the 2-year heat map, then we still have a nice cluster down there at 49K. That would still be my worst case scenario. But for that to happen, the stock markets would also have to drop. Comments? Okay, looks good. My buy zone has been hit again. The second order and the last order are now somewhere down here. Let's just wait and see. Right now, going long feels a bit too risky for me personally. That's because I still have my 2x long open, but I wouldn't go in here with 5x or 10x leverage. I wouldn't buy the dip now, especially with people already shouting, it's finally here. Bear market. Congratulations. After a 40% or 45% drop, you finally managed to say it's a bear market. Congratulations. Congrats. That's how the whole game has to play out. Otherwise, it's sideways for now. I'd actually prefer another leg down, fill the wicks, and then everything looks good. The only positive thing we can take away from yesterday is that the Asia range, which is here, was not broken with the 4-hour close yesterday. We filled the vector candle here to 50%. Wait and see. Really, just wait and see, guys, what else is coming our way. Let's move over to the altcoins. Ethereum is still inside the box. it should now also reach the second zone. Or rather, the second buy order should have been triggered for our model portfolio. Oh no, that one was here at 2083, so 50%. No, okay, then still just one order, but here it's the same game we're seeing. We can see the wicks are being filled down here. Unfortunately, here we got a lower low on the 4-hour chart. I would just continue to stay away from altcoins. Solana next sell-off, but still no lower low. Here too, I'm still convinced that we should actually grab the wick. Let's move over to the traditional markets. Forex USD JPY is pumping. What did I say? If the US dollar heads towards 100, we need to keep an eye on the carry trade again. The short position is still running. Euro is rising. Dollar sideways, but more on an upward level. Gold, $5,062. What the fuck? Seriously. So what does that mean? When gold rises, as I said, I can repeat it 100,000 times over and over again. In the videos, then it has exactly two possibilities. Either interest rates go down, that is, the Fed lowers rates, which the Fed won't do, then gold should actually fall. But now we have geopolitical tensions everywhere, as I showed you at the beginning of the video. And that means for us, everything is fine. I'm totally fine. Everything is good. No, it would be nice if that were the case, but it's not. Gold is rising due to geopolitical uncertainties and also, in a way, monetary policy uncertainties. If this trend continues here, you have to consider, since it's low down here, gold has already reached a peak again. 15, 16%. If you bought gold on Monday, you're already up 10 to 12% for sure. Insane rally happening here at this point. Silver, same story, is pumping again as well. The risks are still there, and those are mainly the bond markets, interest rate policies, and inflation risks. As long as that's not under control, gold will keep rising with occasional ups and downs. Nevertheless, for me, the first resistance is up here, the 4,150, 4,190 levels. If we break through there or manage to get through, then this thick red vector candle here in this area will probably also get filled, or we might even go much, much higher. That's it for the detemper. Let's move over to the traditional markets. DAX closed in the red yesterday and once again tested the top here at B. For me, it's still pointing to the short side. Dow Jones managed to recover a bit yesterday. Nasdaq, red. It only filled the green vector here. But if the futures start off in the red again now and we get even more uncertainty, well, then, in my opinion, nothing much is going to happen. Then we also have to expect further sell-offs here, even if the rest is looking relatively solid. The volatility index is still on an upward trend. A red vector has been left pointing upwards. None of this really looks good. And as I said, AMD yesterday, the numbers weren't really good. So today it's going to be very, very interesting to see what Google delivers. Please note the oil price, it's back at $64 again. So to sum it up, things are really hitting the fan. Not everything is good. At the moment, to be fair, it just looks absolutely terrible. That's the hard truth. That's just how it is. Otherwise, that's it from my side. I'd say we'll hear from each other again tomorrow morning with a new update video. Otherwise, thank you very, very much for watching. Leave a like, subscribe, and join the Telegram group. And with that, I wish you all a wonderful and successful start to the day. Feel free to join the Telegram group. That's it from me. Until then, ciao, ciao, and as always, stay crypto.